Question 1. What is the primary difference between an owner's title insurance policy and a lender's title insurance policy? A. An owner's policy covers the title against defects arising from issues that occurred before the policy was issued, while a lender's policy only covers the lender's interest in the property. B. An owner's policy provides coverage against all potential defects in title, including those that may arise in the future, while a lender's policy only covers defects that existed at the time of the policy issuance. C. An owner's policy is issued to the buyer, protecting their interest in the property, while a lender's policy is issued to the lender, protecting their financial investment against title defects. D. An owner's policy covers the lender's interest in the property, while a lender's policy covers the buyer's interest. Answer. C. Explanation. An owner's title insurance policy is designed to protect the property buyer's interest in the property. It safeguards against potential title defects that could affect the owner's ownership rights. On the other hand, a lender's title insurance policy is issued to protect the lender's interest in the property, specifically safeguarding the lender's financial investment. This policy only covers the amount of the loan, not the full value of the property or the owner's equity. The other options mix up the coverage aspects and the intended beneficiaries of each policy. Question 2. Which of the following statements best describes the purpose of the chain of title ECA title search? A. It is a chronological record of all property transactions, including mortgages, sales, and foreclosures, to determine the current owner of the property. B. It is a summary of all the legal descriptions and dimensions of the property to ensure there are no discrepancies in the title. C. It is a record of all parties who have ever held an interest in the property, from the original owner to the current holder, to identify potential title issues. D. Is a list of all the legal and equitable rights associated with the property to verify that no rights have been omitted. Answer. C. Explanation. The chain of title is a chronological record of all the parties who have ever had an interest in the property. This includes all previous owners and relevant transactions. It is crucial for identifying any gaps or issues in the title that could affect current ownership. This history helps in discovering potential defects such as unrecorded deeds or claims from previous owners. Options. B. Describe aspects of property history and legal descriptions but do not fully encompass the purpose of the chain of title. Option D relates more to property rights rather than the sequence of ownership. Question 3. Scenario-based. Scenario. Sarah recently purchased a property and obtained a title insurance policy. After moving in, she discovers that a neighbor's fence encroaches onto her property. She also learns that this encroachment was not disclosed during the title search. What should Sarah do to address this issue under her title insurance policy? A. She should contact her real estate agent to resolve the issue with the neighbor. B. She should file a claim with her title insurance company to address the encroachment and seek compensation or remediation. C. She should hire a lawyer to pursue legal action against the neighbor without involving her title insurance company. D. She should attempt to negotiate with the neighbor directly to come to an agreement about the encroachment. Answer. B. Explanation. Sarah should file a claim with her title insurance company. Title insurance is designed to protect against issues such as encroachments that were not disclosed during the title search. The title insurance company will investigate the claim and may provide a remedy such as compensation or legal assistance to resolve the encroachment issue. Options A, C, and D involve alternative actions but do not utilize the protection provided by title insurance, which is specifically meant to address such undisclosed defects. Question 4. Which of the following best describes the Schedule B section of a title commitment? A. It outlines the legal description of the property, including its boundaries and dimensions. B. It lists exceptions and exclusions from coverage, including any known issues that may affect the title. C. It details the underwriting requirements and conditions that must be met before issuing the title policy. D. It provides a summary of the historical chain of title for the property, including previous owners and transactions. Answer. B. Explanation. Schedule B of a title commitment includes exceptions and exclusions from coverage. This section lists any issues or encumbrances that the title insurance policy will not cover. These may include easements, liens, or other conditions that could affect the property. Schedule. It provides the legal description. Schedule C details the requirements to issue the policy, and the chain of title is generally reviewed separately. Question 5. When evaluating a title defect such as an unrecorded deed, what is the primary method to resolve this issue? A. Seek a court order to quiet title and clear any clouds on the title. B. Negotiate with the parties involved to settle the defect through a written agreement. C. Purchase an extended title insurance policy to cover additional defects. D. Revoke the existing title insurance policy and obtain a new one with updated information. Answer A. Explanation. To resolve a title defect such as an unrecorded deed, the primary method is to seek a court order to quiet title. This legal process clears any claims or clouds on the title and establishes the current ownership. Negotiation, purchasing extended coverage, or obtaining a new policy does not address the legal defect itself and might not resolve the underlying issue. Question 6. What role does the title examiner play in the title insurance process? A. The title examiner handles the final closing and disbursement of settlement funds. B. The title examiner reviews public records and identifies potential title defects before issuing a title policy. C. The title examiner drafts and files the legal documents required for property transactions. D. The title examiner provides legal representation to the policyholder in disputes involving the title. Answer B. Explanation. The title examiner reviews public records and identifies potential title defects before issuing a title policy. Their role is to ensure that the title is clear and free of issues that could affect ownership. They do not handle closing, disbursement, or legal representation, which are handled by other professionals in the title insurance process. Question 7. Which of the following best describes the statute of frauds and its application in real estate transactions? A. The statute of frauds requires that all real estate transactions be completed in writing to be enforceable. B. The statute of frauds mandates that all oral agreements related to real estate must be recorded to be legally binding. C. The statute of frauds governs the recording of property deeds and the priority of liens. D. The statute of frauds applies only to commercial real estate transactions, not residential properties. Answer A. Explanation. The statute of frauds requires that all real estate transactions, including contracts for the sale or transfer of property, be completed in writing to be enforceable. This statute ensures that there is a clear and formal record of agreements related to real estate. Options B, C, and D do not accurately reflect the statute's purpose or scope. Question 8. What is the primary purpose of an abstract of title in the title insurance process? A. To summarize the current market value of the property for potential buyers. B. To provide a detailed report of the property's ownership history and any potential title defects. C. To outline the requirements for obtaining a title insurance policy. D. To list all property-related expenses and disbursements required at closing. Answer B. Explanation. An abstract of title provides a detailed report of the property's ownership history and any potential title defects. It is a comprehensive summary that helps identify issues affecting the title and is crucial for evaluating the risk before issuing a title insurance policy. It does not summarize market value, policy requirements, or closing expenses. Question 9. Which of the following is a typical exclusion from a standard title insurance policy? A. Defects known to the insured at the time of policy issuance. B. Errors or omissions in the public record. C. Liens or encumbrances not recorded in public records. D. Claims arising from prior ownership disputes. Answer A. Explanation. A typical exclusion from a standard title insurance policy is defects known to the insured at the time of policy issuance. Title insurance generally does not cover issues that the policyholder was aware of before purchasing the policy, as in public records, unrecorded liens, and prior ownership disputes are often covered or addressed through endorsements or extended coverage. Question 10. Scenario-based. Scenario. Michael is purchasing a commercial property and finds that the title report includes an exception for an existing easement that was not previously disclosed. The easement affects part of the property he intends to use for a new building. What should Michael do to address this issue before proceeding with the purchase? A. Proceed with the purchase and seek a discount on the purchase price to compensate for the easement. B. Contact the title insurance company to understand the impact of the easement and explore options for modifying the coverage. C. Ignore the exception and proceed with the construction as planned. D. Negotiate with the current property owner to remove the easement from the title. Answer B. Explanation. Michael should contact the title insurance company to understand the impact of the easement and explore options for modifying the coverage. Title insurance policies often have endorsements or additional coverage that can address specific issues such as easements. Ignoring the exception or proceeding without addressing the issue could lead to future disputes or complications. Negotiating the removal of the easement is typically not feasible, as easements are legal rights that may be protected by law. Question 11. Which regulation governs the disclosure of settlement costs and procedures for title insurance transactions? A. The Real Estate Settlement Procedures Act, RISPA. B. The Dodd-Frank Act. C. The American Land Title Association, author, standards. D. The Fair Credit Reporting Act, FCRO. Answer A. Explanation. The Real Estate Settlement Procedures Act, RISPA, governs the disclosure of settlement costs and procedures for title insurance transactions. RE. SPA requires that consumers receive a good faith estimate of settlement costs in a HUD-1 settlement statement or closing disclosure, providing transparency in the costs associated with real estate transactions. The Dodd-Frank Act and ALTA standards pertain to broader regulatory and industry standards, while the FCRA relates to credit reporting. Question 12. What is the primary purpose of title insurance endorsements? A. To provide additional coverage for specific risks not covered by the standard title insurance policy. B. To modify the legal description of the property in the title insurance policy. C. To document any changes in ownership that occur after the policy is issued. D. To specify the financial terms of the title insurance premium and coverage limits. Answer A. Explanation. Title insurance endorsements provide additional coverage for specific risks or conditions that are not covered by the standard title insurance policy. These endorsements are tailored to address unique issues or needs related to the property. They do not alter the legal description, document changes in ownership, or specify financial terms, which are covered by other sections of the policy or separate documents. Question 13. Which of the following best describes the role of the title insurance underwriter? A. To conduct title searches and prepare the title report for the property. B. To assess the risk associated with issuing a title insurance policy and determine the terms of coverage. C. To handle the closing and settlement process, including disbursement of funds. D. To provide legal advice and representation in disputes related to the title. Answer B. Explanation. The title insurance underwriter assesses the risk associated with issuing a title insurance policy and determines the terms of coverage. They evaluate the title report, review potential risks, and decide on the appropriate coverage and conditions. They do not conduct title searches, handle closings, or provide legal representation. Question 14. In the context of title insurance, what does the term cloud on title refer to? A. A potential claim or defect in the title that could affect the ownership rights. B. An error in the legal description of the property that needs to be corrected. C. A delay in the recording of the deed with the county recorder's office. D. An unpaid property tax that has been recorded against the property. Answer A. Explanation. A cloud on title refers to a potential claim, defect, or issue in the title that could affect the ownership rights. This might include conflicting claims, encumbrances, or legal disputes. It does not refer to errors in legal descriptions, recording delays, or unpaid taxes, although these issues may contribute to a cloud on title. Question 15. What is the main distinction between a standard title insurance policy and an extended coverage policy? A. An extended coverage policy includes additional protections against risks not covered by a standard policy. B. The standard policy covers more types of risks than an extended coverage policy. C. An extended coverage policy is issued only for commercial properties, while a standard policy is for residential properties. D. A standard policy includes endorsements for specific risks, while an extended coverage policy does not. Answer A. Explanation. An extended coverage policy includes additional protections against risks that are not covered by a standard title insurance policy. This may include coverage for risks such as zoning violations or certain types of encroachments. Standard policies generally have more limited coverage. The distinction is not based on property type or the inclusion of endorsements. Question 16. Which law or regulation requires title insurance companies to disclose their fees and charges to consumers in a clear and understandable manner? A. The Real Estate Settlement Procedures Act, RISPA. B. The Dodd-Frank Act. C. The Fair Housing Act. D. The Securities Act of 1933. Answer A. Explanation. The Real Estate Settlement Procedures Act, RISPA, requires title insurance companies to disclose their fees and charges to consumers clearly and understandably. This includes providing a good faith estimate of settlement costs and a closing disclosure. The Dodd-Frank Act addresses broader financial regulations. The Fair Housing Act pertains to housing discrimination, and the Securities Act of 1933 relates to securities offerings. Question 17, scenario-based. Scenario: Emily is reviewing a title report for a newly purchased property and finds a recorded mechanics lien that was not mentioned during the initial title search. The lien was filed by a contractor who did work on the property before Emily's purchase. How should Emily address this issue under her title insurance policy? A. Emily should directly negotiate with the contractor to resolve the lien. B. Emily should ignore the lien if it was not disclosed before purchase and proceed with her plans. C. Emily should file a claim with her title insurance company to address the undisclosed mechanics lien and seek resolution. D. Emily should contact the county recorder's office to have the lien removed from the records. Answer: C. Explanation. Emily should file a claim with her title insurance company to address the undisclosed mechanics lien. Title insurance policies typically cover claims related to undisclosed liens that were not identified during the title search. The title insurance company will investigate the claim and take appropriate action to resolve the issue. Negotiating with the contractor or removing the lien from records is not within Emily's control and does not utilize the protection provided by the title insurance policy. Question 18. What is the significance of the legal description EICA title insurance policy? A. It outlines the property's boundary lines and dimensions for insurance purposes. B. It provides a summary of all financial transactions related to the property. C. It details the historical ownership and transactions associated with the property. D. It specifies the terms and conditions of the title insurance coverage. Answer: A. Explanation. The legal description EICA title insurance policy outlines the property's boundary lines and dimensions. It provides a precise description of the property's location and extent, which is crucial for determining the exact property covered by the insurance. It does not summarize financial transactions, ownership history, or policy terms. Question 19. Which of the following is a common example of an involuntary lien that might affect a property's title? A. A mortgage lien. B. A mechanics lien. C. A lien filed by a property owner as part of a voluntary agreement. D. An easement granted by the property owner. Answer: B. Explanation. A mechanics lien is a common example of an involuntary lien. It is placed on a property by a contractor or supplier who has not been paid for work performed or materials provided. Involuntary liens are typically imposed without the property owner's consent. A mortgage lien is voluntary, a lien filed by an owner is voluntary, and an easement is not a lien but a right to use the property. Question 20. In the context of title insurance, what is the purpose of a closing protection letter CPL? A. To ensure that all closing documents are correctly prepared and signed. B. To provide indemnification to the parties involved if there is a loss due to errors or fraud in the closing process. C. To document the final settlement amount and disbursement of funds. D. To record the new property ownership with the county recorder's office. Answer: B. Explanation. A closing protection letter (CPL) provides indemnification to the parties involved in a real estate transaction in the event of errors or fraud in the closing process. It protects against losses resulting from mistakes or dishonest acts by the title agent or closing attorney. The CPL does not ensure document preparation, settlement amounts, or recording of ownership. Question 21. What is the primary purpose of conducting a title search during the property transaction process? A. To verify the financial status of the seller and their ability to transfer clear title. B. To determine the value of the property and assess the market conditions. C. To identify any existing claims, liens, or encumbrances on the property that could affect ownership rights. D. To evaluate the physical condition of the property and identify any necessary repairs. Answer: C. Explanation. The primary purpose of conducting a title search is to identify any existing claims, liens, or encumbrances on the property that could affect ownership rights. This process involves reviewing public records to ensure that the title is clear and free of any legal issues that could impact the transfer of ownership. The title search does not focus on the seller's financial status, property value, or physical condition of the property. Question 22. Which of the following best describes an adverse possession claim in real property law? A. A claim made by a new owner to correct an error in the property's legal description. B. A legal claim by an individual who has continuously occupied a property without permission, seeking to gain ownership. C. A claim by a lien holder to assert priority over other claims on the property. D. A claim made by a property owner to enforce a restrictive covenant against another party. Answer: B. Explanation. Adverse possession is a legal claim made by an individual who has continuously occupied a property without permission, seeking to gain ownership. This claim is based on the principle that long-term occupation and use of the property may establish ownership rights. It does not pertain to correcting legal descriptions, asserting lien priority, or enforcing restrictive covenants. Question 23. What is the significance of Schedule B EICA title insurance commitment? A. It details the legal description and parties involved in the title insurance policy. B. It lists the exceptions and exclusions from coverage that apply to the title insurance policy. C. It provides a summary of the property's financial transactions and settlement costs. D. It outlines the underwriting guidelines and risk assessment criteria for issuing the policy. Answer: B. Explanation. Schedule B EICA title insurance commitment lists the exceptions and exclusions from coverage that apply to the policy. It identifies specific issues such as existing liens, easements, or encroachments that are not covered by the title insurance policy. Schedule: it provides legal descriptions and parties, while other sections address financial transactions and underwriting guidelines. Question 24. Which regulation requires title insurance companies to comply with anti-money laundering procedures? A. The Real Estate Settlement Procedures Act, RESPA. B. The Dodd-Frank Wall Street Reform and Consumer Protection Act. C. The Bank Secrecy Act, BSA, and its anti-money laundering AML provisions. D. The Fair Lending Act. Answer: C. Explanation. The Bank Secrecy Act, BSA, and its anti-money laundering (ML) provisions require title insurance companies to comply with anti-money laundering procedures. These regulations mandate that title insurers implement policies and practices to detect and report suspicious activities that could be related to money laundering or other financial crimes. The other regulations listed do not specifically address anti-money laundering requirements for title insurance companies. Question 25. In title insurance, what does the term quiet title action refer to? A. A legal procedure to resolve disputes over the proper title holder of a property. B. A formal process to notify interested parties about the change in property ownership. C. An administrative action to update the title record with new property information. D. A court action to challenge the validity of a property tax assessment. Answer: A. Explanation. A quiet title action is a legal procedure to resolve disputes over the proper title holder of a property. This court action is used to clear any clouds or challenges on the title, ensuring that the title is recognized as valid and marketable. It does not involve notifying parties about ownership changes, updating records, or challenging tax assessments. Question 26. What is the purpose of the abstract of title in the title insurance process? A. To provide a detailed history of the property's ownership and any recorded liens or encumbrances. B. To summarize the financial terms of the title insurance policy and premium costs. C. To document the closing and settlement activities, including fund disbursements. D. To outline the requirements for issuing a title insurance policy. Answer: A. Explanation. The purpose of the abstract of title is to provide a detailed history of the property's ownership and any recorded liens or encumbrances. It compiles information from public records to offer a comprehensive overview of the title's history. It does not summarize financial terms, document closing activities, or outline issuance requirements. Question 27. Scenario-based scenario. Mark discovers that a previously unknown easement was recorded after he purchased his property. The easement affects a portion of his land and was not disclosed during the title search. What steps should Mark take to address this issue under his title insurance policy? Mark should negotiate with the party that recorded the easement to seek compensation for the affected property. B. Mark should file a claim with his title insurance company to address the undisclosed easement and seek coverage for any losses. C. Mark should ignore the easement if it was not mentioned before purchase, as it does not affect his rights. D. Mark should hire a surveyor to adjust the property boundaries to exclude the easement area. Answer: B. Explanation. Mark should file a claim with his title insurance company to address the undisclosed easement and seek coverage for any losses. Title insurance typically covers issues related to undisclosed easements that were not identified during the title search. Negotiating compensation or adjusting property boundaries are not the primary methods for resolving such issues under a title insurance policy. Question 28. Which of the following best describes a mechanic's lien? A. A voluntary lien placed on a property by the owner to secure a loan. B. A lien filed by a contractor or supplier who has not been paid for work performed or materials provided. C. A lien that results from a court judgment against the property owner. D. A lien related to unpaid property taxes that has been recorded against the property. Answer: B. Explanation. A mechanic's lien is a lien filed by a contractor or supplier who has not been paid for work performed or materials provided. It is an involuntary lien that can affect the property's title until the debt is resolved. It is distinct from voluntary liens, judgment liens, and tax liens, which are related to different types of financial obligations. Question 29. What is the purpose of a title insurance commitment? A. To provide a preliminary report outlining the terms and conditions of the title insurance policy to be issued. B. To finalize the purchase agreement between the buyer and seller of the property. C. To document the results of the title search and any identified title defects. D. To confirm the financial arrangements and settlement details of the real estate transaction. Answer: A. Explanation. A title insurance commitment provides a preliminary report outlining the terms and conditions of the title insurance policy to be issued. It details the requirements that must be met before the policy can be finalized and issued. It does not finalize purchase agreements, document title search results, or confirm financial arrangements. Question 30. Under the Dodd-Frank Act, which federal agency is primarily responsible for overseeing and enforcing regulations related to title insurance and settlement practices? A. The Federal Reserve Board. B. The Consumer Financial Protection Bureau, CAB. C. The Federal Trade Commission, FTC. D. The Securities and Exchange Commission, SEC. Answer: B. Explanation. Under the Dodd-Frank Act, the Consumer Financial Protection Bureau, CAB, is primarily responsible for overseeing and enforcing regulations related to title insurance and settlement practices. The CFPB regulates practices to ensure transparency and consumer protection in financial transactions, including those involving title insurance. The other agencies listed have different regulatory responsibilities.